Hello, this is Steve Schwartz from Market Traders University, coming to you from the virtual trading studios of Market Traders TV. Today we're going to take a look at the US dollar index, and first we're going to basically look at a daily chart that's going to show this past week's trading range. We've obviously have fallen below the round number of 80, which served as some form of short-term support in this sideways trading channel that we've seen over since the beginning of June. Well, the market now has drawn a line in the sand, as I would call it. For those of you that remember the stuff from the early 90s Gulf War, nonetheless, getting into it, the U.S. dollar is at a critical juncture at this point. The market has come out of a downtrend. Don't be mistaken about that. It has fallen into a sideways trend. How long it will remain in the sideways trend is anybody's guess. If we take a look at a weekly chart, we now will see a clear technical sell signal way up at 88. There was a double top. The trend has been down, but now the market has seemed to put in some form of support. There's a real struggle here between the bulls and the bears. Last week, September dollar index contract opened at 80.40 and closed at 79.50. The September dollar closed higher on Friday due to some short covering. Well, I see this volume spike right here as a very important point to keep in your mind, or just to remember. Simply, this dollar spike was off of a low, followed by some heavy buying, and then consolidation off that heavy buying, and now we've tapered off, albeit the weekly chart shows a lower price, yet the volume decreased. And I'm not sure if that's saying something, but that big spike in volume could be commercials covering shorts, covering their short positions, and looking for the potential bottoming process. This is an important support because this low back in November of 08, this low established in, it looks like, in the beginning of June, and now we're approaching again, just may be strong support. Now, I'm not here to tell you what I think is going to happen from day to day, but I do know that on the longer term charts, if this support is taken out, we're then moving to the target, which will be the next low or low on the way up. Remember, a ceiling becomes support and support becomes a ceiling. So at this point, this was former support. It'll come down to support, but it was also former resistance right in here. As you can see, these declines. That's why the market basically, as it came down the next time, months later, you could see it stopped going down. This resistance became support. Market goes up, comes back down to its former support, stops, and now is consolidating. Hoping this is of help. Keep an eye on the market. I would still be looking, if we're going to make a play on this long term, I would take the guesswork out of it and do a long put call strangle. I call it a volatility trade, just betting that the market eventually, sometime in the next 90 days, is going to break out of the sideways channel. If the market decidedly breaks the round number, it's basically 79, 78.80 is this low. If it breaks it, go short, buy puts, whatever your capital can be produced, but remember, don't ever commit more than 10% of on any trade with with the capital that you have. So anyway, have a great day. Be talking to you, and may the best trades be yours today.